All right, so today we're going deep on the euro.
Yeah, lots going on there right
A
now.
lot of forecasts and expert opinions.
A whole mountain of them, in fact.
The
And
big question is, will the euro take a dive?
it really does seem like there are a bunch of forces kind of pushing it that way.
Yeah, so we'll be looking into the trade wars, interest rates.
And we're going to see what some of the big institutions
Yeah.
like Goldman Sachs are predicting.
So one of the biggest headlines lately is the potential for a trade war between the U.S. and the EU.
Mm-hmm.
I mean, we've seen President Trump impose tariffs on China, on Canada, Mexico,
Right.
and now it seems like the EU could be next.
Yeah, he's been very vocal about it.
Really?
Yeah, his intention to impose tariffs on the EU,
Oh, wow.
citing the trade deficit as a key reason.
Okay, so explain what that is.
So basically, the U.S. is importing more from the EU than it's exporting
Oh, I see.
back to them. So
Oh,
Trump sees this as unfair,
right.
and he wants to use tariffs to level the playing field.
Okay, so the EU is obviously not just going to sit back and take that.
No,
Yeah.
no retaliatory tariffs from the EU are pretty much certain.
Wow.
And this is going to have a big impact on industries on both sides of the Atlantic.
Okay.
You know, the EU is a real powerhouse for high-end manufacturing.
That's true.
So tariffs on those goods would really hurt their economy.
Right.
And then, of course, the retaliatory tariffs from the EU would hit U.S. businesses.
Yeah, it sounds like a lose-lose.
It could be.
So it seems like the markets are already starting to react to this uncertainty.
Yeah, definitely.
The euro to dollar exchange rate, which we see shortened a lot as EUR USD,
Right.
is currently at 1.0246,
Mm-hmm.
which is nearing its 2025 lows.
Yes, and a big reason for that is definitely this looming trade war.
Okay.
Really pushing that euro closer and closer to parity with the dollar.
Okay, so can you explain what parity is?
So parity basically means that 1 euro would be worth the same as $1.
Oh, wow.
So for you, that could mean like your purchasing power in Europe could change.
Yeah.
Drastically, trips to Europe might become more affordable, but imports from the EU could get way more expensive.
That's really interesting. I wonder if people are already kind of factoring that in
I'm sure some are.
to their travel plans and things like that.
Definitely.
So one strategist at UBS,
Okay.
Rohit Arora,
Yeah.
called this trade war 2.0.
Wow.
And he's predicting some really serious market instability.
Yeah. He's not alone in that worry either.
No.
No. There's a real sense that things could spiral out of control here.
Wow.
And beyond the tariffs, we really have to consider all the knock-on effects like interest rates.
Okay, so explain this to me like I'm 5. How do tariffs impact interest rates?
All right. So a trade war could really slow down the economy in the EU.
Okay.
And if that happens, the European Central Bank, or ECB,
Yeah.
might decide to cut interest rates to try to stimulate things again.
Okay, that makes sense. But wouldn't a weaker euro also help
Absolutely.
make the EU exports more competitive
Yeah.
and boost their economy? So isn't there kind of a silver lining here?
Yeah. I mean, that's a really good point. You know, there's always different sides to these situations. It's really complex.
Right.
A weaker euro could make their products cheaper
Yeah.
compared to other countries.
Right.
So, yeah, potentially boost those exports. It's a balancing act.
Yeah.
Trying to figure out how it'll all shake out.
Exactly.
That's tough.
But so lower interest rates, though, could actually further weaken the euro.
Yeah.
Why is that?
Well, so think about it this way.
Okay.
Investors are always trying to get the best return on their money, right?
Of course.
So if the interest rates in the EU are low,
Yeah.
investors might decide to pull their money out and go put it somewhere where they can get higher returns.
Right.
And that outflow of capital puts downward pressure on the euro.
So it's kind of like a domino effect.
Pretty much.
It seems like the big institutions are not very optimistic about this whole thing.
Generally, no. I mean, Goldman Sachs, for example,
Yeah.
is predicting that the euro will fall below parity with the dollar in the coming months.
Wow.
And they even suggest that the dollar could appreciate by 8 to 10% against the euro if we see this global tariff situation.
8 to 10%. That's
It's a lot.
huge.
Yeah. But, you know, we have to remember, forecasting is a bit like trying to predict the weather.
Right.
It's based on the best data we have,
Sure.
but something crazy could always happen
Always.
to throw things off.
Of course.
Yeah.
So what does all this mean for our listener?
Well, I think it's really a good time to start paying close attention to the US-EU trade relationship.
Yeah.
Because whatever happens with this trade war could really impact your wallet,
Yeah.
especially if you travel to Europe or buy things from there.
Right. So if you're planning a European vacation,
Mm-hmm.
maybe waiting a bit might be,
Might get you more euros
yeah,
for your buck, but then again, imports might get pricier.
exactly.
Yeah.
So it's really interesting.
Yeah, and it raises an interesting question, too.
Well, what's that?
Well, if the euro weakens like this, are there other currencies or investments that might start to look a little better?
Oh, that's a really good point.
Something to think about as we try to navigate all this.
Definitely.
Yeah.
Thanks for joining me.
Of course.
Really appreciate all your insight.
Always happy to do it.
This has been really informative.
Good.
I feel like I really understand kind of where things are headed,
Yeah.
with the euro at least.
It's going to be interesting to see what happens.
Absolutely.
Yeah.
All right, thanks again.
You're very welcome.